Have you ever been scammed online and wondered whether you'd ever get your money back? The RBI is introducing a new compensation framework that could help victims of digital banking fraud recover part of their losses. The new rules will now come into effect from January 1, 2027. They were originally scheduled to be implemented on July 1 this year, but the central bank has deferred the rollout by 6 months. So who is eligible, how much can you claim, and what do you need to do? The new framework covers digital banking frauds involving losses of up to 50,000 rupees. If you qualify, you will receive 85% of your net loss or 25,000 rupees, whichever is lower. Here's how that works. If you lose 10,000 rupees, you'll receive 8,500 rupees. If you lose 20,000 rupees, you'll receive 17,000 rupees. But if you lose 40,000 rupees or even 50,000 rupees, the maximum compensation is capped at 25,000 rupees. There is one important condition. This benefit can be claimed only once during your lifetime. To qualify, you need to act quickly. The fraud must be reported to both your bank and the National Cybercrime Reporting Portal or the Cyber Helpline 1930 within 5 calendar days of the fraudulent transaction. Miss that deadline and you may lose eligibility under the framework. One of the biggest changes is where the burden of proof now lies. Earlier, customers often had to prove they were not responsible for the fraud. Under the new framework, banks will have to establish customer liability. Customers will also continue to enjoy zero liability if the fraud occurred because of bank negligence or if a third-party breach is reported within 5 days. Banks will also be required to provide round-the-clock fraud reporting channels, send instant SMS alerts for transactions above 500 rupees, and resolve complaints within 45 days for domestic cases and 60 days for cross-border cases. For fraudulent credit card transactions, banks must provide a shadow reversal within 5 days so customers do not incur additional interest or charges while the complaint is being investigated. The RBI has also laid down how the compensation burden will be shared between itself and banks. For customers, however, the important takeaway is that the framework clearly defines how compensation will be funded once a claim is found eligible. That remains an open question. The RBI's new framework does not specify a compensation mechanism for digital banking frauds involving losses above 50,000 rupees. Online fraud is becoming more sophisticated every year. The new RBI framework won't eliminate scams, but if you report a fraud quickly and meet the eligibility conditions, recovering at least part of your money could become much easier than before. Follow Business Standard for more such stories.